Hello and welcome to Big Deal. I'm Nisha Podar. Let's today focus on the deal scenario and how Nomura's top iBanking team really views the street on this particular front. Let me welcome on the show Amit Thawani, who's the Managing Director and Head of Investment Banking India for Nomura, and Jwalant Nanavati, who's the MD, Head of Southeast Asia Investment Banking and Head of TMT Asia Pac for Nomura. Gentlemen, so good to have you on CNBC-TV18. It's been a while. We have done a status check, and also congratulations, Amit, for taking over the helm of iBanking for Nomura India. Now, tell me, under your leadership, what will be the strategy in terms of generating the business?
Firstly, Nisha, thanks for having me on the show. It's always a pleasure being here. As far as Nomura India is concerned, it's been a very good run for us over the last decade. So it's not something we're starting now. And strategy, as far as we see it, is also linked to the fact where our strengths are. Our strengths are in 4 or 5 sectors, which are very clearly sort of outlined for ourselves. We've been working in those sectors. Products-wise, we have all the full capability suite in terms of M&A, equity capital markets, and financing. And we are growing each of these businesses.
Yes.
So there is no one vertical which we think is not doing well or requires more effort to build. Everything has to grow. And we are oriented in that direction.
Right.
We are putting all our might behind our Indian clients,
yes,
and interestingly also global clients,
right,
looking to be in India.
Right. So global clients looking to be in India, and India is a hot favorite for many economies now. So Jwalant, good to see you in India. You've been in India, you've done iBanking here, you moved to Hong Kong, now you're in Singapore. So you have a great vantage point from where you see the TMT space really developing, the digital tech revolution that really took place. What are the hottest topics of discussion, and how do you picture India in the midst of this?
So thank you, Nisha, for having me over, and always a pleasure, right? Look, I think India is, what I say is in a structural sweet spot when it comes to technology,
yes,
media and telecom companies. Yes. You have 3 mega trends driving this. Consistent private equity and venture investment in this country, in the sector. We have almost close to $500 billion of dry powder globally, of which around $40 billion VC investments are earmarked for Asia. Now, a lot of it has come to this country, and I think it'll continue to, I think the trend will accelerate. Second, during this downturn, a lot of the growth companies have tightened their belts, right, and have become operating profit positive, and I'll touch upon that in a bit. And third, the management teams and the corporate governance levels in the country, due to various legal changes that have happened, including bankruptcy law and so on and so forth, have improved significantly over the last decade.
Yes.
With that, you see a growth of very unique private companies. So we just hosted this private tech day where we had 22 corporates across various tech sectors, 100 plus investors in our offices here in Worli. And what an event. Last 3 days, Amit and I have been just completely at it, and a really exciting time to be in India.
Give us a sense of the themes developing in that tech conference, and what is the biggest talking point now?
So one thing is very interesting, right? Out of the 20 odd companies that were there, almost 2/3, or maybe I would say 3/4 of them were already profitable.
Yes.
Which was a big change compared to a couple of years ago.
Yes.
Second, the diversity of investor universe, from very large cap private equity funds to hedge funds to the crossover investors and venture funds, have all are all looking at this, and it's all patient capital.
Yes.
So a lot of the accelerated capital providers have taken a step back, but they're being replaced with really patient long-term capital providers.
Yes.
And third thing, in our view, what will happen is a lot of the new kind of technology companies. So when we look at TMT in India in the last 5 years, we essentially have only tasted one subsegment of it, which is consumer tech.
Yes.
Consumer internet companies, to be very frank, right?
Yes.
The next generation of technology companies will be software as a service businesses, new age IT companies, data analytics businesses, financial technology businesses, but they're really not fintech, they're more tech-enabled financial services companies,
Yes,
right?
yes.
Digital lending, credit providers, and then Gen AI-based businesses, which are going to be very exciting.
Generative AI has become the new buzzword. But Jwalant, many takeaways from what you said. But we have seen the startup space and the funding winter continue. How is that looking now, Amit? And from the conversations in the tech conference, are you picking up? Are there any green shoots?
I'll probably just add one thing to what Jwalant said. He talked about a number of things. I think there is no more capital on steroids. We were in a mode last few years where capital was on steroids.
Yes.
Now it's more mature capital, more capital which is patient and thinks about business as a business.
Yes.
And also the interesting part over the last 3 days, while companies have achieved EBITDA break-even or profitability and all of that, it's also the management team's maturity.
Yes.
There is a level of sensibility in which how they are thinking. There is a level of maturity in terms of how they are planning the next 2, 3, 4 years.
Yes.
That's the big change.
So some of the IPOs in the pipeline from the startup space, and they will make an attempt in next 6 months or so, they're all showing profits on the books. But I have one question. It shouldn't be very based on optics. Jwalant, we have seen one listed company with adjusted EBITDA. The street didn't take that well. So it shouldn't be just optics or engineering. There should be a clear path to profitability and profits. So the maturity has come, lessons learned. But what is it that you're sensing on the ground?
So, it's really interesting you asked that question. I think what corporates have realized, startup community, I would almost not call them startups anymore. These are growth companies.
Yes.
That's probably the right way to define them, right? These are high growth companies. They've understood this concept of marginal utility of growth.
Yes.
So there's a benefit of growing at 50, 60, 70%.
Yes.
It's almost like a Formula One car, right? You can have the best car, the best driver, right? But even that driver needs to drive it in a sensible way. Look, I just came from Singapore. We had a big event, so so using that analogy. But genuinely, founders have understood that beyond a certain acceleration, the best of founders and the best of companies cannot control their growth. So a measured, controlled growth, which generates solid contribution margins and net margins in the business, is the name of the game. And honestly, it's very hard to sort of paper over those cracks, right? Either you have a genuinely good business or not. And I think investors, as well as regulators, both will be very diligent around it this time around.
So valuation is the key, and since we are playing around with the word margin, let me also put it that the diminishing marginal utility of scarcity premium was very evident by the end of it. Amit, is there sanity on valuations? Are we going to see that in the upcoming ones? Because I still see some of the EV company per se trying to raise funds at a much higher valuation, which didn't get takers. So we have such instances available on the ground.
Well, that's now a little bit of a sunrise sector, right? So let's for a minute leave that aside, because that's the new next wave, which is
sector of the future.
That's the sector of the future. But look, I think leaving aside that part of it, valuations in general, whether it's on public markets or private markets, have sort of come to some reality check. And it's part of the funding winter, it's part of all of this thing that has happened. So as I said, I don't think now capital is about valuation alone. There'll be many companies who will not get the capital at all, at any valuation.
Right. So all right, so there is sanity on that, but we always come up with buzzwords. Jwalant, you will agree. So it was earlier digital, data analytics, and now generative AI. Any company attaching artificial intelligence to their deck is expecting a higher valuation. How is the AI scenario panning out? Give us a gist on that.
So I'll tell you, AI is much more than a buzzword, right? If used appropriately, generative AI particularly, but AI in general, can be a complete game changer for all industries.
Yes.
So I think if you have to think about generative AI, you'd almost need to think about it like internet. Internet touched every single sector.
Yes.
Between late 90s till even today, right?
Yes.
And I think all companies which are forward-thinking will incorporate the tools that are going to come through. And look, think about it from a a test match term, right? We are in the first half of first inning, in the first session.
Yes, yes.
There's going to be a long game here.
Yes.
And I think this will be continually being incorporated. Now, there'll be companies which will be early adopters.
Yes.
They will improve that efficiency, operating efficiency. There are also social implications to generative AI in a country like India, which has large populations and employment considerations, right? So there'll be some sort of government policies as well coming through in various countries, actually, not just in India.
Yes.
So it'll all come through in coming years, but it's here to stay.
Oh,
right?
yes, it's evolving very fast.
Yeah.
And but AI will be one of the aspects to be watched out for going forward. And many of the companies who have really adopted it much faster are the ones who are going to be interesting and will be also asking for a premium in terms of their valuations and investor.
Well, yes and no, right?
Yeah, it's an early cycle philosophy, right?
Yes.
It's still an early cycle. It's growing.
All right. So yeah, I take your point. And on that note, we'll just slip into a short breather, but we'll discuss much more in details about what's happening on the ground when it comes to a deal street, M&A, and deal making in the country, and what's the view going forward for the rest of the year. Stay tuned to Big Deal.